Richard. Nice to see you.
Hi, Eden. Great to be on the panel with you today.
Hey, everyone out there. So I'm Eden Doniger, General Counsel and Chief Compliance Officer at BigPay Inc. We are an Atlanta-based company, 10 years old. We're actually one of the very oldest and longest standing crypto companies in the space. And I'm really excited to be here today to talk about this topic because this goes to the core of our existence and our purpose and mission. So I thought, Richard, maybe this is going to be a packed 20 minutes and we can jump right in and start sharing our thoughts. You and I talked a little bit about this beforehand, and I think what we're both seeing is very similar. And that is really a disruptive level of adoption at this point of crypto payments as a payment solution. And really in the last year, it's been explosive. For BigPay, because we were founded with that as our mission, our co-founders, Stephen Pear and Tony Galippi, when they decided to found a company in this space, this is what they chose because they knew there was a huge future for this. And they had that long view of what the potential was. And even though at the time they founded the company, it wasn't really a big thing yet. There were definitely some companies looking to try out crypto payments, but it was more on the fringe. And it has grown steadily year over year for us. And we are at a point now where we have all kinds of new use cases that are really fascinating across different industries and different sized businesses. But what we're really seeing a lot of is enterprise companies with global presence in regulated spaces, non-regulated spaces, across a variety of industries, knocking on the door, ready to launch with us. And this is, in some instances, companies that a year ago were just not quite ready. Something has really shifted, and I don't think it's just that the price of Bitcoin has been steadily high for a while now. I think it's deeper than that. So maybe we could start off with, what are you seeing as well in your role at Deloitte for your clients who are looking to jump into the payment side of crypto?
Yeah, thanks, Eden. Again, as Perry Ann mentioned, I'm a principal in Deloitte Consulting. I cover blockchain and digital assets for banks and capital markets firms. So I'm working with banks to adopt stablecoin, crypto, other digital assets, and to help their clients adopt those assets. And one of the things we're seeing, it goes back to one of our clients was quoted a few years ago, maybe 2018, and saying that the adoption of crypto comes in two phases. First is the investment phase, and the second is the use phase, right? The deployment of the asset itself. For the clients we're working with, they're largely B2B, Eden, and the orientation they have is that they could allow clients to bring digital assets, or they themselves could buy and hold digital assets on their balance sheet, but they want to be able to use them. They want to be able to leverage the assets for business purposes, and business purposes means using them in commerce. So working with a number of clients who are really focused on payments first before buy, hold, sell. Payments first, and there's two approaches they're taking. One is hands-off, one is hands-on. The hands-off approach is kind of the first generation of utilizing blockchain as a solution for payments, and that is using the rails to move payment, particularly cross-border, but buying an asset, transmitting the asset, selling the asset, and holding the local currency, on books. The asset characteristics. I was with a executive at a leading global financial services firm a few weeks ago. This quote struck me. It was an offsite. There were about 30, maybe 40 executive team members. And this executive who runs their FX business said, "Stablecoin is the fastest form of payment ever in the history of the world." This was his assertion. And they're working through, well, how do they leverage that? What are the implications of using stablecoin, a bearer asset, or another type of digital asset, maybe a tokenized deposit? But there was broad agreement that using blockchain to facilitate payment is a very disruptive and compelling opportunity for their clients as well as for them. Now, Eden, you all have been in business. We've been in the business of serving the crypto industry since 2012. So we've been doing it for about 9 years, starting with tax, accounting, and now working with larger institutions who are viewing it as a disruptive and transformational play. You too have been in the business since 2012. What are you seeing with regard to institutional adoption or B2B payments beyond some of the B2C activity you might have seen early?
Yeah, we're seeing a lot of what you described. I would say it's so interesting to hear about those comments. One of the things that we offer, which I think is really attractive in the sense of those companies that want to have a handoff type experience and they don't want to necessarily take on the risk of, the pricing volatility of Bitcoin or other coins, is a solution where they can kind of not touch any of the crypto at all. They know that refunds are available and can be processed. They know that all of the compliance measures that they would expect are in place, and they can get settled in the fiat of their choice. And it's very seamless. And I mean, that's the solution that we built. But I haven't yet seen, we do have some merchants who do want to get settled in crypto and add that to their balance sheet, or some mixture. But still, I would say the majority of them would rather be settled in fiat. And I think that that's a critical factor for adoption. We find that as we have conversations with potential merchants, that's one of the biggest questions they have. Do I need to touch the crypto? If I don't, what happens? How does that actually work? And then just to your point about sort of having other ways to gain traction with their consumers, I think that in the industries that clearly attract crypto users, that's easy, right? They're already clamoring for it. But for companies where they're trying to figure out a way to find those people and get them in the door, and they want to spend their crypto, they're also looking now to do really strategic marketing campaigns in creative ways that they would never have done before. Because if you just are reaching out to this sort of crypto purists out there and the people who've been doing this for a while, it's not going to be quite enough. So there's a lot of interest in how do we work together. We're not just providing a solution that works in a payment sense, but we're also providing sort of a full service strategic solution to drive adoption. One more comment I was going to make is, what most of our international global presence type companies love the idea of facilitating cross-border transactions in such an easy and quick and effective, cheap manner. Stable coins are really helpful for that. I think what's interesting is, some payments companies might say, oh, we offer hundreds of coins. We haven't taken that approach because we think that, you really have to be smart and careful and thoughtful about which coins you want to use for payments and why, and not just go with something that's maybe trendy or just be able to say we have so many. So for us, we're very strategic about which ones we offer and why. And a lot of compliance considerations are built into those decisions as well. And I think for our merchants, that's really appreciated. They can choose if they want to allow all of them or only allow Bitcoin or whatever they want to do. It's very flexible. I think offering that kind of flexibility has been a huge value add too, so that they can get more comfortable as they dip their toes in and then go further.
Yeah, one of the that's really interesting to hear. As you were describing, like companies offering 100 different tokens for payment. Who would want to pay with a DeFi governance token? I mean, just because you can doesn't mean you should. Yep. Right. Not all tokens are transactional currency. One of the things that we're doing now is we're mobilizing to develop a survey and a paper to point of view on merchant acceptance of cryptocurrency. We're just finalizing the questionnaire now. We're going to go out to 2,000 merchants of all sizes and really get perspectives on, do you accept crypto or not? If you do, why? If you don't, why not? What are the barriers to acceptance? What kind of incentive models need to be created? If any, so that we can bring a point of view to all companies who are looking to enable crypto payments to be able to address those barriers for adoption. Adoption is clearly way up, and you can point to a number of factors that are influencing adoption, but the adoption can only go so far if you don't have merchants for B2C as well as institutions on a B2B basis utilizing the blockchain and digital assets on the blockchain for payments and payment finality. We're really also in particularly interested in the implications of Treasury. So a client said this week that they have a point of view that there will be banking in the future, but they're not sure there's going to be banks. And this was a bank saying that, because depending on the adoption and the value proposition and how the financial services industry embraces and utilizes and becomes part of the ecosystem, it will influence the role that they play in facilitating payments. Regulation's also going to impact that. I'll come back to that in a minute. For Treasury, corporate Treasury is being able to, the hands-on, the hands-off experience. The hands-off I mentioned was using assets for completing a transaction. So purchasing an asset, transmitting an asset, and the receiver liquidating the asset, and both sides, keeping US dollar or whatever local fiat currency on their books. The hands-on approach is keeping the digital asset, the crypto or stablecoin, in that native format, holding that, on their books, holding that in custody. Sometimes what we're seeing become of increasing interest is self-custody. So imagine, if you will, a corporate treasurer doing self-custody of digital assets, using those digital assets to facilitate a payment to a business partner directly, wallet to wallet, custody to custody, without anyone involved, doing it cross-border in real time. That sounds very compelling, and it would be very efficient for payments. But I think what's going to become increasingly clear is that the financial services needs of every institution go well beyond payment facilitation, liquidity requirements, credit requirements, other underwriting and issuance type of assistance. So payments is probably the area that's going to, in the business of blockchain, get the greatest traction in the coming 12 months, 18 months, particularly as regulation gets more clear. But if banks stay engaged, there's an opportunity for blockchain in business and the business of blockchain to continue to reshape banking itself. On regulation, we think about the tax implications that are in the infrastructure bill and what that means. What are you seeing, Eden, or what are you watching and concerned about at BigPay as it relates to some of the tax laws that are coming on board for these payments?
Yeah, of course, we're very interested in that. I think that, the way it looks like it's going to play out as the bill gets signed is it's going to have a huge impact. I don't think it's some sort of catastrophe, but it is a huge impact. I mean, for us, we're in an interesting spot because we built already a solution a few years ago for collecting identity information and verifying it and screening it for other regulatory requirements. So we're in a position where we can easily expand that for other regulatory requirements, and it won't be a big lift for us. It's obviously got an impact on consumer adoption and how, some consumers feel about providing personal information for maybe smaller transactions that they otherwise wouldn't think they would need to if they weren't using crypto. So there's friction there, and it will take some adjustment for sure. And who knows how this gets implemented exactly. There's still time. First of all, there's plenty of time. And second of all, there's still room for some interpretation there. And I think that's going to be really interesting to watch and to be involved in. And I know the Chamber of Digital Commerce and other groups have been heavily involved in advocating certain positions there. But I think for us specifically, we're probably the best placed payment processor to adapt quickly and pivot quickly for regulatory changes and requirements. And I'm proud of that because we built that into our culture and into it. So we've done compliance by design, really, in all of our product rollouts and in our sort of mission of our company. And I think what's going to be interesting is these big businesses that are looking for compliant solutions that they can be comfortable with. That's becoming more and more important, right? We already thought it was important 2-3 years ago, but now it's critical. It's table stakes, honestly. And I think companies that aren't ready for payment providers that aren't ready for that, that's going to be a big hill to climb as quickly as they need to. I don't know if you're experiencing that in some of what you're seeing, but for us, like, I think, it becomes a real competitive advantage, honestly, to be able to say to your potential enterprise merchants who are global, who have, compliance and legal concerns that they have to convince their board and their leadership that they should be comfortable with moving forward with accepting crypto payments, that they're working with a third-party provider that has lined all this out properly and can prove it and can pivot quickly if they need to be compliant with something new that comes out. So that's how we see it at BitPay.
Interesting. Since we're in the business of tax and helping our clients to sort through, tax, as well as we're in the business of audit and regulatory compliance, we're looking at it's a veritable onslaught of different perspectives, from the Presidential Working Group to FATF to the infrastructure bill. Ultimately, within the area of tax specifically, I think we'll find that if the IRS is considered bread, then adding Bitcoin is like sliced bread, or adding blockchain and crypto assets. What do I mean by that? It's an innovation. It's the ability to automate and to have complete transparency, to add smart contracts, to capture tax revenue at the point of instance, and to have like full transparency and traceability for those taxable events and the associated tax revenue. It's like, Eden, it's like driving through Easy Pass now. Easy Pass, on your window, is probably the most efficient form of taxation. You don't question how much you're being charged or whether you're being charged. It's just connected. It just goes. Mm-hmm. The same thing is going to happen as there becomes clarity around the tax framework and the tax laws associated with these payments. In fact, it's going to be a far more efficient taxation regime than exists in the current payments method. Right now, all taxation for current payments is off-chain. It happens well after the fact, maybe month end, maybe quarter end, right? The quarterly tax payments that businesses will pay based on, receipts at the register, or, based on other, financial records. And to be able to, integrate that with clarity and certainty, and to be able to have, different bodies to participate and have the same transparency into those transactions, is going to be attractive to the government, but it also is going to reduce friction for business themselves. I don't know that any business gets into business for the purposes of doing books and filing taxes. So if you can ease that, you can take a lot of the burden away and allow businesses to focus on the business they do. So I think it could bode well overall for general adoption of payments and the benefit that all parties see in use of blockchain for payments.
Yeah, I know we're almost out of time. I completely agree. And I'll just add, I think everything you just said is really true of any compliance requirement that is going to be built into any of these solutions, is, whether it's the tax side or an AML related, anti-money laundering related, or sanctions related compliance. We're seeing a lot more guidance coming out from the US Department of Treasury on sanctions compliance and ransomware issues, and travel rule compliance under the Bank Secrecy Act. And it's just all kind of coming together more now. It's going to take a few more years, but we're heading in that right direction, I think.
Yeah, and one thing we're really encouraged by, just, if I may, final word. One way to view this is, the regulators are cracking down. The other way is they're providing a clarity, right? They're providing assurance. They're providing the rules of the road to enable growth. And I think that from the business of blockchain and using blockchain and payments, it's simply going to give surety and certainty to participants that are outside of the space right now to come into this area and to begin to participate. I think it's good for adoption overall. Nothing like clarity of rules to get you on the field to play the game.
Yep. And thank God we have the Chamber of Digital Commerce and other similar groups to really help steer that in the right direction.
For sure.
Well, I think we are Perry Ann might be coming back in a minute, but it's been a pleasure, Richard. This was a fun, quick, but fun chat. And thanks for your perspective. I appreciate it.
Likewise, Eden. Thank you.